Ever wondered how companies like Apple or Amazon make money and grow so big? It's not just from selling iPhones or delivering packages to your doorstep. They tap into a powerful tool, the stock market, a place full of opportunities. Think of it as a giant marketplace where pieces of companies, called stocks, are bought and sold every day. Imagine owning a tiny slice of your favorite pizza place, enjoying a piece of the action. That's what owning stock is like. You get to be a part of the company's journey. You become a part owner, sharing in both the profits and, sometimes, the losses that come with it. Don't worry, we'll break it all down step by step, making it easy to understand. The stock market is where businesses go to raise money by selling these ownership pieces, called shares. Investors, like you and me, buy them hoping the company will grow, making their investment worth more over time. It's a dynamic, exciting world, and understanding it can be your key to building wealth and financial freedom. So, are you ready to dive in and explore this fascinating world? Let's unlock the secrets of the stock market together and start your journey to financial success. The stock market is all about buying and selling, a dynamic and ever-changing environment where fortunes can be made or lost in the blink of an eye. It's like a giant auction, but instead of rare paintings or antiques, we're trading shares of companies, each representing a small piece of ownership. Imagine you buy a share of delicious donuts for $10, hoping that the company will grow and become more valuable over time. As more people crave their donuts and the business expands, the company's value goes up, reflecting its increased profitability and market presence. Now, others are willing to pay $15 for that same share, seeing the potential for even greater returns in the future. You can sell your share for a $5 profit, capitalizing on the increased demand and higher price. That's the basic idea. Buy low, sell high, a simple yet powerful strategy that drives much of the trading activity. Of course, it works the other way too, and the risks are just as real. If Delicious Donuts messes up their recipe or faces bad publicity, the share price might drop to $5, reflecting the company's troubles. You could lose money if you sell at this lower price, turning your investment into a loss. The stock market is driven by supply and demand, the fundamental forces that determine prices. When more people want to buy a stock, the price goes up, reflecting the increased interest and perceived value. When more people want to sell, the price goes down, indicating a lack of confidence or a desire to cash out. It's a constant dance, and learning to read the music, understanding the trends and signals, is key to success in this complex world. Let's talk about what you actually own when you buy stock shares. Think of a company like a giant pizza cut into slices. Each slice represents a share of ownership. If a company has 1 million shares and you buy one, you own 1/1,000,000th of that company. These shares are traded on the stock market. When you buy a share, you're not buying it directly from the company, but from another investor who wants to sell. It's like buying a used car, but instead of a car, you're getting a piece of a company's future. Owning shares comes with benefits. Depending on the company, you might receive dividends, which are a portion of the company's profits. Plus, your investment can grow if the company does well. Remember, owning stock makes you a part owner, sharing in both the successes and challenges of the business. Where does all this buying and selling take place? On stock exchanges. These are like giant online marketplaces where buyers and sellers connect. Think of it like Amazon, but for stocks. Some of the most famous exchanges are the New York Stock Exchange, NYSE, and the NASDAQ. Each exchange has its own rules and listing requirements. Companies listed on the NYSE, for example, are typically larger and more established. The NASDAQ is known for its tech-heavy listings, like Apple and Microsoft. Don't worry, you don't need to go to Wall Street to participate. You can buy and sell stocks online through brokerage accounts. These are like your gateway to the stock market, allowing you to place orders and manage your investments. Section 5. Real-world roller coaster stock market ups and downs. The stock market is rarely a smooth ride. It's more like a roller coaster with its ups and downs. Remember Delicious Donuts? Imagine they release a new donut that becomes a sensation. Demand for their stock soars, pushing the price up. That's a bull market, a period of rising prices and optimism. Now, imagine a competitor launches an even better donut. Suddenly, Delicious Donuts isn't so hot anymore. Their stock price could plummet. That's a bear market, characterized by falling prices and uncertainty. Understanding these cycles is crucial. Don't panic and sell everything when the market dips. Remember, long-term investing is like a marathon, not a sprint. Ride out the bumps, and over time, your investments have the potential to grow. Section 6. Taking the plunge. How to get started. Ready to jump into the stock market? Great. First, you'll need a brokerage account. There are many options, some offering more features or lower fees than others. Do your research and choose one that suits your needs. Once you have an account, you can start researching companies. Look for businesses you understand and believe in. Think about the products you use every day. Are there companies behind those products that you think have a bright future? Remember, investing involves risk. Never invest more than you can afford to lose. Start small and gradually increase your investments as you gain experience. Consider diversifying your portfolio by investing in a variety of companies across different sectors. Section 7. The thrill and the spill, risks and rewards. Investing in the stock market can be both rewarding and risky. It's a journey filled with highs and lows. Let's start with the good stuff, the potential for high returns. The excitement of seeing your investments grow can be exhilarating. Over the long term, stocks have historically outperformed other investments like bonds or savings accounts. This trend has made stocks a popular choice for many investors. Your money has the potential to grow significantly, helping you build wealth and achieve your financial goals. This growth can be a powerful tool for securing your financial future. However, it's important to remember that past performance is not indicative of future results. The market's future is always uncertain. The stock market is inherently unpredictable. Prices can fluctuate wildly in response to various factors. Economic downturns, geopolitical events, or even a simple tweet can send stock prices tumbling. These events can create significant volatility. That's the risk you take as an investor. The possibility of loss is always present. The key is to approach investing with a long-term perspective and a healthy dose of caution. Patience and careful planning are essential. Don't chase quick profits or get swayed by market hype. Stay focused on your long-term goals. Do your research, invest in companies you believe in, and be prepared for the inevitable ups and downs of the market. A well-informed strategy can help you navigate the complexities of investing. Section 8. Wrapping it up. Your stock market journey begins. So, there you have it. The basics of the stock market. We've covered a lot of ground, from understanding what stocks are to navigating the roller coaster of market fluctuations. Remember, investing is a journey, not a destination. Start by educating yourself, researching companies, and gradually building your portfolio. Don't be afraid to ask questions and seek guidance from financial professionals. The stock market can be a powerful tool for building wealth, but it's important to approach it with knowledge and a long-term mindset. Now that you have a basic understanding, go out there and start exploring the exciting world of investing.